From natural gas discoveries in Tanzania, oil prospects in Kenya and Uganda, the East African region has become a low-hanging fruit for investors, as Beatrice Gachenge found out in the second annual Oil and Gas Summit held in Nairobi.
Kenya is edging closer to viable oil production after Tullow Oil announced in February that Twiga South 1 well had shown the first potentially commercial flow rates achieved in the country. It also predicted a total combined rate flow of over 2,850 barrels of oil per day. The country is now racing to lay the groundwork needed to reap from the recent discoveries of oil.
At the moment, in recognition of the aged pipeline which runs from Mombasa to Nairobi, which is 35 years old, we have a project to replace it with a bigger pipeline to supply the region, not only Kenya, but the region with the refined petroleum products, as we await the construction of the inland refinery in Uganda, which is we now know is going to take place, but when the project is going to start, we don't know. It's going to be a 30,000 barrels a day processing refinery, and that is not enough to meet the demand for the region. We plan to replace it with between 18-inch and a 20-inch pipeline, but that is going to be firmed up in a couple of weeks after the demand study which we have carried out.
What we are doing now is preparing for the tenders for the partners who will actually build the jetty with us, and that should be out fairly soon. We anticipate by third quarter of this year we should commence actual activities related to construction.
The ambitious projects, however, come with an expensive price tag.
Total costing is roughly around $500 million. That is not only for the jetty, but also for the new storage that will be associated with the jetty.
Right now, we think the demand is going to grow from, for refined petroleum products, we think it's going to grow from the current 4.6 billion, 5 billion liters per year to something like 15 billion in the year 2030.
In January, Anadarko Petroleum Corporation started exploring for oil and gas off the Kenyan coast, joining the likes of National Oil Corporation. But as investors take up opportunities in the nascent industry, some headwinds have already emerged.
At the early stages of exploration, all you're doing is you're buying risk. You're not buying an asset. So why tax when somebody is buying risk? It shouldn't be a case. There shouldn't be any risk, any tax attached to buying risk. But once you have done enough exploration and you've been able to identify a tangible asset, where now you're actually transferring assets between one company and another, and I'm buying something tangible, then it makes sense to have tax at that level.
The new constitution is advocating for the local counties to get involved in the oil and gas sector, but through which process? So there's a lot that needs to be done in the oil patch in Kenya.
From deals struck in boardrooms to public auctions, which way should Kenya go while awarding licenses to prospecting companies?
We should be going to an area where licenses are being put out for auction on an international basis, whereby people do that. I know that in the past we have been, not only East Kenya, but most of East Africa, have basically been, people have gone in to express an interest. And when you're doing licenses, you invite those people to come in and say, okay, fine, which one do you like, and you negotiate. But I think that creates part of the uncertainty and the fear that people in Kenya have around, are there deals being struck in boardrooms and stuff like that. But if you go on a proper international tender like most people do, where you say you have 10 blocks, you advertise them globally, and you have a public opening and then a public award, that should actually remove a lot of those fears that people have.
Like many other highly technical sectors, human capital is a major challenge. Kenya has taken a raft of measures to plug the skills gap.
Skills globally is a challenge. When you look at the analysis that are done by different companies, the demand is still much higher than the available level of skills. So globally it is a challenge, and certainly for a frontier country like Kenya it is more of a challenge, because whereas we have a lot of very qualified Kenyans, they're all out in the diaspora somewhere. So we as National Oil have started a very aggressive competency mapping exercise, which looks at available competencies and what are the gaps, but which will also help us to identify what are the existing skills, not only within Kenya, but maybe outside, that we can readily tap into to really help us advance this particular sector.
All eyes are now cast on the new government, which made several promises to develop oil exploration in Kenya.
With the current election of President Uhuru Kenyatta and Vice President Ruto, the Kenyan economy is expected to grow in 2 digits. So we expect with new findings, Turkana oil coming to production and presumably more finding of gas in offshore Kenya, I think Kenya will become a good destination for foreign investments.